Hello, I'm Christina Wadlow from Western Union Business Solutions. This is going to be a 10-minute session giving a high-level overview of the currency markets and how volatility affects business. If you'd like a more in-depth macroeconomic outlook, let me know and I can give you details of our webinar with our partners at Oxford Economics. Alternatively, I can arrange for you to have a one-to-one with one of our regulated advisors. The same amount of money is traded on the FX markets in a day as is traded in the stock market in a whole month. That's around $6 trillion. And 97% of that is speculative. So this means that businesses trading internationally are a passenger on the ride of volatility. We asked 1,000 businesses what their biggest worry today was with regards to FX management. And 35% of them said that market volatility or the timing of trades was their biggest concern. And we know that when future market scenarios are difficult to understand, it can make decisions daunting and distract from sticking to a pre-approved business plan. We asked those 1,000 businesses what kind of tolerance they could handle with volatility before it becomes a real issue to their business plans. And we can see, based on the fact in the last few weeks, we've seen a 14% move in sterling dollar. We know that our customers in travel and tourism, retail and manufacturing are starting to have some really difficult decisions ahead of them. But what moves the currency markets? So we know that fundamental studies such as economic data help speculators and traders to make a decision as to where and when to place their money. So this would be things like interest rate, inflation rates. We also know that they will consider speculation, so sentiment surveys are really important as to how they make their decisions. And of course, technical analysis. So where the markets have been previously will help them make a decision as to where they might be in the future. The key one at the moment that we're seeing is geopolitical events. So generally you consider that a stable government or a stable economy is a good place to put your money. So when we're seeing uncertainty, so if you were talking about this 6 months ago, it would have inevitably been around Brexit, whereas now we're seeing the uncertainty created around coronavirus is causing a lot of volatility within the markets. So when we're looking at coronavirus specifically, we can see that it's really hitting sentiment. So from a UK outlook perspective, we know that consumers and business confidence is collapsing stock markets. So yes, we've seen some panic buying and that might temporarily boost GDP, but this is not going to be a long-term effect. We know that there's a damage to the supply side of the economy, so we're struggling to produce and deliver goods and services. There's a loss of demand, so people are less likely to be or unwilling or unable to make as many purchases. So this all leads to what's largely expected to be a GDP loss. Now, to counter that, all major economies, including the UK, are taking measures to keep countries going. So that includes salary protection, increase in welfare spending and other fiscal measures as well. And it's predicted that if we can contain the pandemic, a bounce back rather than a full recession is forecasted. But what does that look like for currencies for sterling against a couple of major currencies? If we look at sterling US dollar, we can see over the last 90 days, we saw a high of 132 in February, but a few weeks later we've seen a low of 115 in March. We're currently trading at rates of 35-year lows against the US dollar, so that's exchange rates we've not seen since the 1980s. And we saw 8% volatility in 1 week as investors ploughed money into safe haven currencies such as gold and the US dollar. It's a similar story with sterling euro, which we've seen hit 12-year lows. That said, it did bounce back by 5 cents in 1 day. We have seen 4% volatility in 1 week, and with both economies, or both economic regions facing uncertainty, whilst we are hopeful that we will see sterling rally, we're expecting similar uncertainty to continue. And now onto a case study. This was written 6 months ago, but it's still relevant. At the time it was Brexit that was causing volatility, but now it's coronavirus. Lode Manufacturing are a manufacturer of specialist high-performance bags. Their supply chain spans across the world and is typically priced in US dollars. Their managing director mentioned that they were budgeting for US dollars around 150, this is back in 2016, however rates fell by nearly 20% to 130 and their profits were devastated. So their ongoing market volatility has been a big problem for them, which they've had to pass on to their customers, which is an issue because their product is so price sensitive. So what did they do about it? So they spoke to Western Union and got some advice around the most appropriate hedging solutions. In this case, it was a combination of forward contracts, so fixing an exchange rate for a future date and delivery, and some options trades, which were giving them the right but not the obligation to buy currency when it hit a certain rate. The result was that they could protect their profits and therefore protect their pricing for their customers, giving their customers reassurance of the price of their goods, even if the market was unstable. So the solution at a glance, we know that they had the challenge of financial uncertainty or exchange rate volatility. Their solution in their particular case was a combination of different hedging tools, and the result was they had more control over their profits and pricing. And this rings true for all of our customers. The idea is that you want to best understand what your currency exposures are. Can you accurately forecast what you're going to need in the future? And can you assess your currency risk? So is that a case of what happens if your budgeted level is not met? You then want to develop a strategy around that. So protect your budgeted level, participate at the favourable rates, and enhance your performance compared to your competitors. And that strategy rings true for all of our customers. It's really important to identify your currency exposure, develop strategies around protecting any budgeted exchange rates that you might have, and execute in the most appropriate way for you. Western Union is well placed to be able to help our customers. We can send 130 currencies to over 200 countries. And as well as doing individual payments, so one payment going to one place, we can do bulk upload files of up to 500 payments in a single file. So, a couple of questions. How do Western Union make our money? Well, we make our money in the difference between where we buy it and where we sell it to you. Is your money safe? Yes. All funds are held in a segregated client trust account. How much does it cost? It's free. It doesn't cost anything to open an account with us, but that does give you access to a personal account manager who is qualified and regulated to give you advice. And transacting with us is free as well, so there's no hidden payment costs. You're either going to see if you're going to save money or not. How do you trade? Most people will trade either over the phone or via our online platform, which is called Edge. And how do you open an account? You can open a free no obligation account by contacting me. So if you've got any questions, if you would like to sign up for a macroeconomic update as to what's happening with the currency markets, or you would like to open an account, please do contact me. Best email address is christina.wadlow@westernunion.com. Hope to hear from you soon. Thanks a lot. Bye.